This month for our interview I'm joined by Clive, who is the Director of Countrywide Tax and Trust Corporation. And before we start, Clive, I have to say that on your website the letters after your name seem to go on for longer than your name, so we'll just go through them. BSc, CEng, FIMMM, TEP, obviously it's the TEP we'll probably be talking about mostly today. FIMMM, what on earth is that?
Well, I started my career in the mining industry, and so I'm a fellow of the Institute of Materials, Mining and Minerals. Right. So that's where that comes from.
It's a very impressive collection of letters. TEP is obviously the reason that brings you here today, and the fact that you work in trusts and taxation.
Yeah.
And an area that is of particular interest to an awful lot of people up and down the country. For years I have whinged about the fact that lawyers are allowed to write their own wills and other people's wills, but we're not, accountants aren't. This particularly becomes bitter at Chartered Institute of Tax meetings when half are lawyers and half are accountants. But interestingly, your business seems to be doing some work with people to help them draft wills in the first place.
We've been in the business now 10 years of helping and assisting clients to put the wills in place that they require. There is a perception, I think, out there in the environment that people need a solicitor drafted will. They don't need a solicitor drafted will. Anybody can draft a will at the end of the day. But even with regulation that's coming forward, it's the type of person you want to sit in front of to draft that will for you. Two important aspects for me. What I would advise a client is A, make sure they've been trained correctly, whatever that training is, and make sure they've got PI. Because at the end of the day, however good we all are, we can all make a mistake one day, so we need to make sure the client's covered so that if there is a mistake there, they're at least going to get compensated for the mistake we as professionals have made.
But a lot of people, I guess, at the moment, I mean, we're in a much more relaxed world, it seems, these days. We don't need to have the high detailed wills. Most people have a house less than £650,000 or an estate less than 650. Surely if they're married, now we've got the transferable nil rate band and things like that. We have access to deeds of variation should we need one. Surely the will itself isn't as important as it once was.
I wouldn't agree with you there. No, I think it is as important as it was. That everybody should have a will. I mean, all the will's really going to do is direct who do you want to be your executors when the time comes, the people that do the work, I suppose. Guardians, who do you want to be the guardians of any children who may be under the age of 18 when events take place? And lastly, who do I want to have this wealth I've built up over a period of time? Now, you can have a straightforward will that says when I die my assets go to these numbers of people, children or grandchildren, whoever it may be, but there's a lot more you can do within the will writing process to protect that wealth, because most of us have worked hard as we've come through life generating the wealth that we've really got, whether it be houses, businesses, farms, wherever that wealth may be. And we need to put some time and thought as to how we want to protect that so it stays with our family in the future. And that whole process you can do within the will writing process. So you have got the two extremes, i.e. you can just write a basic will that says here's where my assets go, or you can put a lot more time and effort into it and decide where those assets go, but what level of protection you want around it. And I think probably one of the successes that we've had as a company is because people always are talking about growth. You know, how do I grow my wealth? Well, it's great if you grow your wealth as long as it stays with you and you put it in the best protected bubble you can. Now, you can't protect against everything, but there are lots of things out there in terms of care in later life, people, having to pay for their care, and that issue doesn't seem to be sorted by the government. Divorce and bankruptcy of the children, all sorts of things where that wealth that you've built up can be lost.
So when writing the will, it's not even a case of, we were talking before about who you want to leave it to, and the idea of, I want it to go to my kids, but actually the divorce of those kids many years after the will is written, but the person then goes on to die, is something that we need to consider. And also this idea of, as you were saying, protecting the asset against care fees and things like that. Is it as easy as people say to write this into wills? Is it possible to protect that money in the way that we want to? Well,
there's nothing in life that you can 100% guarantee that you can protect it. But what you're after with a client, I think at least we can put the maximum protection around it we can. And that's all we're looking for at the end of the day. So all I would say to anybody who's sat down with a professional trying to write a will is at least that professional is going to ask those questions of the clients. What are they concerned about? You know, are you concerned about children divorcing, going bankrupt? Are you concerned about care? And if you are, then at least the structures can be put in place so that the maximum protection possible's in there for you. Or you sit back and have a basic will.
And when we're saying we're going to have the structures in place, does this mean we're going to have a million trusts all over the place, or does it not have to be that complicated?
I don't think, I think a million's stretching it a little bit, you know, but yes, you probably do need some trusts in place. And there's also some legislation. There's a RISAF case in 2003 where if you put assets into multiple trusts, you can get different settlement dates for the trust, so they all have their own periodic and exit charge. So you may need multiple trusts if it's a wealthy client, but that's all part of the process when you sit down with them and you identify the wealth, and then you decide how many trusts if you want to protect the assets that you want.
And so I think it's important we just say as well that for the viewers watching, what we're saying is that actually this is something they could certainly start to look at themselves. This is something that as an accountant they could be sitting down themselves and thinking, yeah, I could have a go at this. I can make sure that we try and protect things, because we've almost given them a checklist, haven't we, of are we worried about this, are we worried about that, are we worried about the other. So it doesn't have to be that we then give it to a solicitor to sort of sign it off. Is that right?
Absolutely not. I think my comment would be with solicitors or any other professional, and I suppose it's not greatly different with accountants. You've got particular expertise. Accountant doesn't mean to say you know everything about every bit of accountancy, and I don't think solicitors know everything about everything in law. There's different partners when you go to a practice who specialise in conveyancing or maybe criminal law. Now, you wouldn't want to go to a criminal solicitor to write your will for you. You know, as long as that solicitor has that expertise and deals in that area of law all the time, then you should be getting good advice. And just like the professional that's not a solicitor, like you know, someone TEP trained like myself, you're going to get that advice, because my sort of legal skill is in a very narrow area: wills, tax and trust. I don't know anything, well, I don't say I won't know anything about criminal law, but I certainly won't advise anybody on criminal law. I stick to what I'm good at, stick to the knitting.
To pick on a couple of areas of tax that I know people are very concerned about in wills at the moment, one is this 10% to charity rule, and I, despite the fact we keep talking about it in lectures up and down the country, I'm still approached by people who say, so it cost my family nothing, doesn't it, because I'm giving up 10% in my estate, but they get 10% off, so it must be the same figure. But it is obviously completely different to that. It
is completely different. I've got to say, since the rule came in, and we draft around about wills for about 250 clients a week, I haven't used it with a client yet, right. That none of my clients have chose to use it. So I don't think the outside world is seeing it such a great relief as maybe. But I'm sure there are clients out there who do want to leave 10% to charity, and of course it is slightly better for them, but it's not quite as clear cut as, you know, charity's getting 10% and it's not costing us anything.
Exactly, because it's a reduction of the estate rate, yes, from 40 to 36. It's not a 10% deduction from your tax bill. So that's interesting. So you're not coming across it in practice that people are saying all this media coverage of it, it's the thing for us to do. We
have not written a will with the 10% to charity in there since it came into being. And I say we sit with about 250 clients a week drafting wills and trusts for them. So. There's not that many using it at the moment.
That's interesting, isn't it? The other thing that they're talking about changing at the moment is this idea of non-domiciled spouses and the £55,000 that you can leave to a non-dom before you have all the problems. And they are thinking of increasing that to 325. And again, I must admit, even I've been saying to people, this takes the pressure off the will, because if your house is more than 110,000, obviously you couldn't just leave half across. But it does open up some does it, well, maybe I should ask you that question, does it relax the pressure on a couple where one of them is non-domiciled, or does that will still need to be spot on?
I think all the reliefs you get, whether it's the non-dom, the 10% to charity, are all helpful in the process, and they may be reliefs that are applicable to you as a client in the way that you want to sort your estate out. But I don't think it takes anything off requiring a will, because my own opinion when I sit down with clients is the clients that haven't planned are the disasters of the future. If you've planned, the disaster probably won't occur, but if you've not planned, it will occur. And so the will needs to be put in place. It's just that process again of what have I got to think about, what can I do within that process of writing a will. And there's a lot more in there than what the normal client would think. Most clients think a will's a will. and you can do a lot more inside that process than probably many clients think about.
Okay. One other thing I wanted to touch on technically, which is this idea, which leads on actually from the idea of leaving the spouse half a house. Still, we're finding people out there who aren't owning houses properly with couples. Is that fair to say?
Well, I think it's a condemnation on the whole of the business, I think, out there. That probably when I sit down with clients, with most clients, the biggest asset they probably own is their principal private residence, their main residence. And when you ask them the questions about how they own their property, they generally don't understand how they own it. And so that should be a condemnation on all our professionals, that this biggest asset we've bought, we don't actually understand how we've bought it. So you've got the jointly owned property where if one dies it goes to the survivor. Seems to be a very good solution, nice easy solution, but of course that just creates problems, because if you just look at care without going into taxation, that I die, leave my property totally to my spouse, it's then in my spouse's estate to be attacked by the authorities to pay for care. And of course, if my spouse were to go into a new relationship, then that property that I once lived in is now maybe going to be potentially lost to my children long term. So there's some real problems about joint ownership, and I think people should give great consideration to be tenants in common. And this is where you each own a specific portion of the property. Most people it's 50-50, but maybe it doesn't have to be that. It could be 70-30, 80-20. But then when I die, because I do actually own 50% of the property, I can do what I wish with it, not have to leave it to the surviving spouse with the potential problems that may create. So I would always advise clients to be tenants in common. I don't really understand joint ownership. It may have been a good thing in 1925 when we invented it, but I think life has changed now. We're not in 1925, and I don't think it's as appropriate as it was.
Normally at this point I ask our interviewee a question. I have a feeling this is the most redundant question I will ever ask at this point. If you could offer one tip to people out there in practice, what would that tip be?
Right, I will.
There you go. I thought it probably was.
That one.
I thought that probably was going to be it. Clive Ponder, thank you very much indeed.
Thank you very much.